Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. Today, just wanted to share a few lessons from the earlier Land Daily Diligence session. I think there's always something that both I learn as well as just kind of, lessons that come up again and again in, maybe a more unique format that hadn't been seen before by other properties here. And, some can just have a whole bunch of red flags that are more routine, but all put together in a mishmash. So there was one property we were reviewing today. It was like almost 30 acres in Virginia. It was like just southwest of DC. So it wasn't like that rural, so finding 30 acres out there, it's going to be um, pretty interesting in and of itself. And it was a very oddly shaped property. There was probably three direct road frontage points, and there was, some jutting in areas of where, some parcels had been subdivided off probably from the original parent parcel and had homes built on them. And the whole property was like pretty much surrounded by other single family residences. And it appeared to be in an HOA as well and was technically ag land, which, like, again, all this is just pretty unique for the given situation. And the land investor who sent us a deal was like, hey, it would probably make sense to subdivide this, but it would need to be rezoned first. At least I'm taking their word for this property. And by the time they had sent this to us, and like rezoning could take upwards of a year, which is, not something you want to get involved in, especially in this environment. So they thought, okay, maybe it could be considered for rec or hunting property. Yeah, hunting would be considered rec anyway. They didn't really suggest, okay, could you just have like a single family home on one part of the property and then the rest is just larger acreage for a buyer? It's possible as well. So that's just something I would have considered as well. But like when you look at it, hunting, yes, normally when properties are, 10 acres plus, maybe a little bit less than that, depending on what area that you're in, you could be thinking about, possible hunting features, especially if there's some contour and vegetation built in, maybe a creek running through to attract game. And there was a creek that was like kind of approaching one of the borders of the subject property. Um, Again, I know it might be a little hard to paint a full picture here, so I'm trying to be as relatively detailed as possible about this. But, when the 30 acres is, again, pretty thin as well, too, when it's like surrounded in every direction from or with single family homes, I would be astonished if hunting was allowed on a property like that, especially in an HOA. And I would just make the blanket assumption that, whenever there's people kind of living nearby, there's going to be some type of local regulation to enforce, uh, you know, guns going off. I mean, yeah, I guess if it's bow and arrow stuff, that probably doesn't matter as much. I know some areas are like way more lenient about that, and there's, less risk of, a person just out in their yard and all of a sudden getting shot. So yeah, there maybe if you're doing bow hunting, it could be a different story versus um, using rifles. I don't know. You'd have to check on that, but that is something we kind of encountered recently as well. But taking even a step back, like when 30 acres is surrounded by other single family homes, like it's probably not going to attract that much game anyway. I mean, you probably get some, but it's not like there's a lot of other directions for game to come onto the property. Like there's not other rural areas from like much larger kind of natural landscapes for them to come onto the subject property. They'd have to be crossing, pretty fairly densely populated areas in order to even get to this 30 acres. So I would think it's higher risk from that standpoint anyway. But let's, get past that factor and let's just consider, okay, maybe there is game and, bow hunting, who knows? possibly that could be done versus, yeah, could you really fire off guns? And even if that was allowed in the area or not like outright banned, I know in some other areas, even if there aren't like direct city level regulations on gunfire in certain directions, if neighbors are concerned, law enforcement might be called and like to check it. Hey, is this like okay and all of that? And you might be attracting increased scrutiny from that perspective. Again, I mean, can you imagine the tragedy there is, even if you're trying to be safe out hunting and whatever, and I don't know, something goes wrong and you just misjudge the direction or get startled or whatever, and then all of a sudden there's, severely injured neighbor or worse that was in the direction of your gunfire. So that would be something to note. I mean, here in Austin, I mean, my wife and I have a house that is in a larger master plan community that was, like much more recently developed within like the last 5 years or so. And it used to be like way more rural than this. And there's kind of a holdout. Gun club would be maybe the nice way to say it. But yeah, I mean, there's some old family on like 10 acres that still like they don't want to give up their land. All the big builders around here, and they're still firing off guns routinely. But I know for a fact, like neighbors in our area, they just, because it's like right next to a subdivision, they're getting calls, and who wants to deal with like law enforcement kind of maybe coming out and checking what's going on. It just it sets a different set of expectations for whoever's living nearby. So that to me was like a major concern there to consider. So that's why I was thinking, okay, possibly you could sell it for like a single family home, but without subdividing, because clearly there was some zoning issues and long length of time to even do that. And then there was another piece where first this buyer seemed to have bought it peak market, like 2005, 2006 for almost 700 grand. And, again, sometimes I'm astonished, like even accounting for inflation, some of those prices that were in mid thousands, like were never even seen even 20 years later. I mean, some pockets, yeah, they did get back or even exceed some of those pricing from 20 years ago, but most parts of the country, it was just such a, like people think we're in a real estate bubble now, and I largely agree, especially in a lot of parts of the country. But, the mid 2000s, like you take a look at some of those sales prices in areas that are like, still not even that developed. And it's just crazy how much equity was just lost from people getting stuck in some terrible deals. So this person bought for almost 700 grand, again, net of inflation 20 years later, like who knows what that is. It's well over $1 million. Definitely. Actually, I'm going to run the calculation live here on the podcast. Bear with me. So like, let's just say 670,000 USD in 2006 and 2025 dollars. So they're saying, yeah, that's the equivalent to almost $1.1 million. So it's pretty much close to it. Not quite a double in inflation, and it could be even more, because you think about that opportunity cost. You could have got a return on your money. Not, it's even net of inflation plus opportunity costs. Like that's even more funds out the door. So they are like deep in the red here, and they've tried listing this property multiple times, sometime like 2017. I think a couple times, like north. I forget how much it was listed for then. Maybe it wasn't. Didn't have that listing price, but then it was also listed early 2024, a little less than 500 grand, something like 400 something. Maybe it was right around 400. Yeah, I think it was listed for like 395 actually. Now it's coming back to me. Again, net of inflation, that's at like 33%. Recoup potentially if they got it at listing price. It went under contract, the buyer bailed, and then it was, the listing got taken off the market again. And now, this seller is trying to offload to a flipper, and the current price agreed on it was, I can't reveal all of it, but it was like less than half. It was less than half of their asking price from the initial listing. And so that just tells you, again, I've made this warning a number of times, like, okay, if you have a recently active listing or an actual active listing and you're not doing a ton of value add or subdivide on it, like that means that the seller hasn't gotten any firm offers, not even lowball ones, because they're willing to offload just to get out of it by, you, the land investor, buying at such a reduced price from what's even listed. So usually I would just like take that price, cut it in half again, and then maybe you might be in range for possibly buying that property. But I'd be so skeptical of that one, multiple listing, not able to offload. Basically trying to exit at 10% of, their inflation adjusted cost of this property. Just like brutal loss, brutal. Like I've definitely made some bad investments in the past. I feel for this guy. Like that's a nasty investment to be bailing out of at this point in time. But that's kind of the nature of the markets, right? You gotta work with what's possible. So that's how I'd be thinking about that particular property. And again, you also have to account for the black mark of this property being listed, just recently for almost a year, not selling. It was pending before, and then now it's going to be listed by you as a new owner again too. Like that's just, and you're not planning on doing any value add. That is a really tough situation. Again, like I mentioned, that's like multiple red flags all wrapped into one for a parcel like that. Just keep that in mind, and these lessons will guide you through, and especially in a market like this. A couple of our other listings that we were working on for months to get these purchased. I probably wouldn't have bought these in the current environment. It's just we had so many sunk costs. We were working on these literally for like 9 months to close, and have actually some very strong buyer interest right away. It's just like even last week, interest rates were shooting up. And this is in South Carolina, and land interest rates for conventional financing is like over 10% now, which was a bigger bump. And so that's going to put extra pricing pressure. And it's like, yeah, maybe if tariffs get really, I'm not betting on that. That's why I'm like, okay, I want to offload these properties. We'll work with these buyers. What we're understanding of these interest rate environments. I want to recapitalize. Doesn't matter if I break even on some of these smaller deals. Just like get me out of them ASAP here, because I'm not expecting things to change for the better anytime soon. Hope I'm wrong, but that's not the bet I'm willing to make. So just FYI, even on this like most recent data over the last week, even over the last hour, to keep in mind here. So with that, seriousland.capital for any of your funding needs. Zero cost review of your land deals at Land Daily Diligence Facebook group. Obviously just reported on one from today. Ran out of time to review all the deals. We have more coming. Well, not this Thursday, because Thursday we have a hot seat virtual UnConference session at 1:30 p.m. Central. Hope to see you there with myself, Dave Deniston, Justin Sleva. And then landpricer.ai for the most simple and accurate way to price land. I was just meeting with my CTO earlier, right before this, and we think we found a really solid LLM model that could reduce a lot of the time needed from the user based on the script that we wrote. I think the LLMs have gotten so much better even over the past few months that this is going to be a pretty interesting direction to take it. More testing to come over like the next 24 hours, but wanted to let you know about our continued progress there. With that, subscribe and share. Take care, everybody. Bye.